Finally, class 14, how to put everything together. Congratulations, everyone. This is nearing the end. We have learned most of the basics of investing in Asia. And this class, we're going to look into how to put everything together. Right, so far, out of our past 13 classes, what have you learned? We learned the secret of investing. How can we really make money in the stock market? And the secret to investing is to have patience. And in a market where everyone is just rushing to look for the next big thing, if you have the patience to wait for compounding to work, you will have an edge over all the others investors in the stock market. And we look into what is a stock. We should not look at stock as a ticker, but rather is a part ownership of a business. And we should invest in businesses which we want to be associated with. We look at the very important difference between investing and speculating, and how to really be an investor and not be a speculator. We look at what is value investing, and can we become a value investor? What do we need to be? Do we need to do? Most importantly, we need to know how to control our emotions and have patience. We look at the history of great Asian investor. There are many great Asian investors who has shown us that it is possible to make a wealth in the stock market in Asia. We also learn to read stock information pages from Google Finance, Yahoo Finance, and some of the websites such as the SGX.com and Bursa Marketplace. We look at how to read a financial statement, the very basics that we need to know in order for us to analyze a stock. We also look at what is the practical guide on starting your first brokerage account. Then we move into understanding what is the type of value that you can actually find in the stock market. There's basically 3 types of value to be found: asset value, current earnings, power value, and growth value. And then we went into learning the practical tools on how to screen for stocks, and lastly, how to value a company based on the type of value that we can find within them. So this is what we have gone through over the past few months. And if you are unclear on one topic, I encourage you to revisit the class and make sure you have all the basics down. Okay, so what now? We learn of all the basics, but what should be the sequence of event if we want to start to hunt for stocks to invest until the point where we can actually make our first investment? So we can screen for different types of stocks based on the type of value that we want to find. If it's a asset value that you are more interested in, we can screen for stocks first for low PE or low price to book, and then we can have a short list of companies that we can look at, right? If you just go to some of the basic screener we introduced in the past, like Financial Times or just SGX Fact Stocks or Bursa Marketplace, and if you do a screen, most likely you'll come up with quite a long list of names. You can check them out by downloading their annual report, or just look at them through Morningstar, Google Finance, and the exchange website. And from there, we use the 5-finger rules that we talk about to quickly scan through them and see which one of them is worthy of our time to analyze more. And once we decide some of the companies that is really interesting to us, and we can go ahead and research more on its business, mostly coming from its annual report, also reading its competitor annual reports, or just Googling the industry and see what is happening within the industry and the company. And then we can do check out their financial statement, doing some of the financial ratio analysis to see if it's really a good company that we should invest in. Next, we want to form a story around the company. We've formed a story around the company, like what we have done in class 11, and we translate that story into a valuation assumption, and we form a valuation to come up with an intrinsic value of the company. And there we have a price point where we can start investing in such company by adding a margin of safety. So if you have forgotten, so this is the storyboard that we can use to come up with the story for an asset-based company like Hong Kong Land. We're basically trying to answer 6 main questions. What is its business? What is the addressable market? Doing a SWOT analysis of the company. What are the reinvestment risks and possibility? And then the risk assessment of what you feel the company risk level is. We can do that for current earning value type of company as well. The only difference is the way we screen for it. Instead of screening for low PE and low PB, we want to screen for something with stable dividends, with some cash flow, and maybe some small growth within a company. And from there on, it is the same. We can also find this company from what we call a top-down approach, just looking at the whole market as a whole and seeing which industry is more stable in nature, something like telco or utility companies, and then we zoom in on that industry, looking for the best company to invest within that defensive industry. All right. Again, this is the storyboard of Carlsberg Brewery Malaysia. I encourage you to have a storyboard for all the companies that you look at to give you a clear and simple way to refer back whenever you need on why you have shortlisted such a company. Lastly, the sequence of events for finding growth companies. You can definitely screen for fast growth company through looking for company with high revenue growth, high earning growth, or high free cash flow growth, right? But you can also just be more observant by reading the news, understanding the trends of different industry. Say right now, a lot of things is happening within the technology space, from talking about AI and machine learning, and also social media is still a fast growing sector. And certainly you can also look at geographical growth area, like if you're talking about the growth of Indonesia or the growth of Vietnam, and still the growth of China. And if you are interested in it and this pocket of countries, then you can definitely zoom in on some of the better companies within the country and start researching on them. And in our class 11 and class 13 example, our growth company is Hartalega Holdings. And again, even if a growth company has a more complex business prospect in the future where we might not see it fully, we still have to try our best to come up with a storyboard for the company. And again, the storyboard doesn't have to stay static. So even if we say we have come up with a storyboard of Hartalega now, maybe the next year we'll have to revisit it again and renew it on an ongoing basis till we can see how the story of the company is shifting, how our opinion of the company is shifting, and it gives us more confidence in our investment. Hi guys, thanks for watching the video. Remember to click on the link down below to get to all the Rise Up and you'll be able to download even the slides and the podcast as well.